Pay attention because next week, the numbers that will be released will mainly be related to the market's overall mood. We call this week the famous job week, meaning we'll be focusing on 3 or 4 key figures that could impact the crypto market to some extent. But as usual, we're starting off this daily update with a look at the market. Of course, Bitcoin. If you take a look at the trend, since the dip in mid-December, we've been in a somewhat unclear zone where Bitcoin would go up one day. Then it would pull back the next day, and all of this happened without any real conviction. But now that we have a bit more perspective, we can clearly see that despite all this volatility, the trend has still been slightly bullish, especially in the last few hours. So nothing explosive here, of course, but the sentiment is starting to take shape with a gentle upward slope this time around. And so, actually, this range, this sideways movement with a gradual climb, this still very unclear direction is very well explained when you compare it to the investor sentiment we've talked about and we'll discuss again in a moment. But the market actually wants to go back up. Confidence just hasn't fully returned yet. Every bullish move here is quickly challenged, both to the upside and the downside. And if we look at the other major cryptos, I'll show you that in just a moment. On crypto bubble, like Ethereum, we see almost the same pattern. A market that's searching for direction, slowly climbing, but where confidence is still fragile. On the other hand, there's one category that seems to want to go its own way at the start of 2026, and that's meme coins. And that's a whole different story. Because if we take a look at the numbers, we've got PP up 58%, Bond up 42%. What else do we have? Floki up 39%. That's just huge. And it's happened in just 3 days. So as far as I know, there hasn't been any major news. No obvious catalyst, nothing. Just random spikes like that, coming out of nowhere. Like we often see in this ultra speculative segment. So is this the comeback of meme coins? Should you invest in meme coins? Maybe you're investing in them right now. Personally, no. Because honestly, I wouldn't rush into it. Because actually, this kind of rapid surge, without any real structural volume or fundamentals, often ends with an equally violent correction. And we know how that ends. Basically, the last ones in are the ones who pay the price. Grade, in fact, gets rewarded. So, in short, not much is happening except on the same coins. But above all, you have to keep a cool head, especially in my opinion over the next 2 or 3 weeks, because we're going to be challenged like this. But let's move on directly to the market sentiment. I'm going to close this. Sorry about that. There we go. Now we can see everything. That is, we actually understand better now how and why. The market was stuck in a range these past few weeks. And as I was just explaining to you, the price barely moved because investors were extremely fragile. And we just come out of a record period of extreme greed. And that's not a minor detail here, because when the market stays in extreme fear for so long, it usually means there's huge tension building beneath the surface. And in reality, the whole market wants to go higher. But the macro signals, the flows, the volumes on the leaders, all are pushing in the right direction. But the problem is, we have this fear of seeing another wave of liquidations, of getting wiped out by the market, like what happened to us at the end of 2025. So we know very well that at these price levels, if several $1 billion worth of positions get liquidated all at once, it can become catastrophic for the market. And in the end, just the mere possibility of that happening is enough to hold back some buyers. And the good news in all this is that we've seen the first sign of easing since yesterday. The index has finally moved from extreme fear to fear. So it's a small victory in itself, but a victory nonetheless. And it's very clear that the market needs time, needs macro data, needs proof, needs consolidation, precisely to regain that confidence. And if you've been following my daily updates lately, you shouldn't have missed the fact that the most significant performances have mainly been on the metal side. Precious metals, I'm talking specifically about gold, silver, or even others like copper, for example. And that's actually why one of the most important analyses of the week is the comparison between Bitcoin and gold, which you can see right here because we have the leader of cryptos facing off against the leader of metals. And according to several technical analyses, we might actually be testing a critical level on this ratio right now. So this is a threshold that, in the past, has always signaled the lowest point of a bearish cycle for Bitcoin. And the key signal in all of this is right here, because it's the famous RSI, the Relative Strength Index, which is applied specifically to this BTC versus gold ratio. And this is very important. To explain this technical concept a bit, the RSI is actually a momentum oscillator because it measures the speed and magnitude of price movements over a given period. And in fact, this indicator is coming back to touch a historic downward trend line. And this setup, in fact, hasn't appeared very often, only 4 times before. So we're talking about 2011, 2015, 2018, and 2022. And on each occurrence, that point of contact coincided with a major bottom in the Bitcoin market, and that marked the end of a capitulation phase. It was a phase where investors panic sold, and actually the beginning of a massive recovery in the following months. So right now, we're testing that same level again in 2025. And if history repeats itself once more, this could indicate that the capitulation phase is behind us, and that a major reversal might be in the works. Second news item, which definitely concerns you, and especially for people who invest, it's about the famous ETFs in France. Because according to a study reported by BFM TV, the number of ETF holders in France has skyrocketed by more than 117%. That's just huge. And here, we're only talking about the year 2025. So this has made it possible to reach 2.6 million investors, and among them, 52% are under 35 years old. So actually, projections also show that there could be more than 4 million potential holders, which we could reach by the end of 2026. So from 2.6 to 4 million, with 1.6 million newcomers, mostly young and mostly beginners. And even though for now this only concerns traditional ETFs and not crypto, this behavior is building a strong financial culture. And that's actually a good sign. We're looking at next week because, as I was saying, the numbers that will be released will mainly be related to the so-called job week. That is, a week where we'll get a bit of a sense of the market's temperature. Because I'm expecting, at least that week, some short-term volatility to be created, either in anticipation of the numbers or as a result of them. But I don't think there will be any really sharp moves unless other more macroeconomic factors come into play. But let's already talk about Wednesday, January 7th. We'll have the jobs report, the well-known ADP numbers. So it's an excellent indicator here. In any case, it's a leading indicator for the official NFP, which is released 2 days later, just as a reminder. And actually, it often triggers significant anticipatory moves in crypto, especially if the gap between expectations is large, and crypto traders watch it very closely, precisely to position themselves ahead of the big report. And speaking of reports, there's the JOLTS report, which is about job openings, coming out on Wednesday, January 7th. It's closely watched by the Fed as a measure of labor market tightness. And if we get a high number, it signals that the labor market is still strong. So in other words, that's a headache for the Fed, which actually weighs on risk assets like crypto. And on the other hand, if we see a decline, it will strengthen bets on much lower rates. Then on January 9th, we'll have, let me scroll down a bit, we'll simply have the non-farm job creation numbers, the non-farm payrolls. Payrolls? Plus, we'll also get the unemployment rate. And that's far from being the most market-moving event of the week, and often of the entire month. But the jobs report directly influences expectations regarding, in fact, the Fed's decisions, so everything related to interest rates and liquidity. And cryptos, as risk assets, generally react quite strongly. So we'll also have solid data, meaning that if employment is strong, there will also be less of a rate cut. So expected downward pressure on BTC and crypto. And if, on the other hand, the data is very weak, there will be hopes for more accommodative policies, which would provide upward support for assets. Regarding the other figures here, we'll also have the ISM PMI, which is the manufacturing and services indicator. These are actually important indicators for the real economy, but they generally have less direct and immediate impact on cryptos than employment data. Sure, especially since during a week dominated by what's called Jobs Week, we'll also have weekly jobless claims, which can add some noise, but they remain secondary. So there you go, a little news update. I didn't do it yesterday because I was tired last night. I couldn't do it, but I thought I'll do it for you on Sunday instead. You have an overview of last week and also how to prepare for the coming week. If you found this interesting, feel free to share, like, and subscribe if you haven't already, and I'll see you on Monday to cover the week's news in crypto, finance, macro, and geopolitics. We'll also talk about Donald Trump and Venezuela, which I haven't had the chance to discuss yet, but which will have an influence and an impact because it's geopolitics, and geopolitics, like macro, affects the market. I also talk about it on Instagram and Telegram, so feel free to subscribe, and also to the Tuesday newsletter, as well as Kojo. Anyway, between two videos, you can find me over there. See you soon. This was Julian. Bye bye.